Aloha YouTube, thank you so much for checking out this video. If you're new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at Altria Group, one of the world's leading tobacco companies. We're going to dive in and take a look if this is a company that is great to invest on. We're going to look at many different sources and look at the dividend history. And I want you to make a decision to see if this is a right investment for you. As always, please remember that all of this is not financial advice. This is just me sharing. Hope you like this video, guys. If you haven't done so, please hit that like button, hit that subscribe button, and don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. Without any more delays, let's take a look at Altria. So Altria, ticker symbol is MO, one of the world's leading tobacco companies, has been in operation for more than a century with a strong portfolio of well-known brands such as Marlboro. Altria has a significant presence in both domestic and international markets. So why would you consider Altria as a potential investment opportunity in 2024? Well, despite the global declines in smoking rates, Altria has successfully diversified its business to adapt to changing market trends. So if you look at their website, you can see a little bit more about what are those changes. I would like to take a look a little bit more about some of their goals for 2025. As you can see, they're trying to do establish harm reduction and provide access to expert information for those who have decided to quit. So you can see a little bit more. One of the things that I saw when I went to their website is the message from their vice president. They committed to offering alternatives, and that is what they're planning on for the future. Now, if we go to their fourth quarter 2023 earnings call, in their presentation, you can see some of the stats. You can see the cash return to shareholders. You can see from 2019 to 2023, you can see 7.8 in billions. So definitely, if you want to take a look a little bit more, check it out. Moving on to Simply Safe Dividend, based on their dividend safety score, it is in the borderline safe. The dividend yield is about 9.77, which is rounded out to about 10. Market cap is about 70 billion. You can look a little bit more at the key metrics. Payout ratio for this company is 77. You got your forward payout ratio of 77. 54 years of consecutive dividend streak without a reduction. And then if you look at the dividend growth, 20 years, only very slow, about 2%. Last 5 years, about 5%. And then you got your latest of 4%. You can see here from the payment details, quarterly in the months of January, April, July, and October, and then you get your annual payout, $3.92 per share. Uninterrupted dividend streak of 54 years without a reduction, and you got 54 years of consecutive increases. It is undervalued based on Simply Safe Dividend, and then you got your forward payout ratio. It is leaning towards the low end of the 52-week price range. You can see, and then you can see the PE ratio is 7 versus the consumer staples of 19. And then you got more of these stats, as you can see from here. Earnings per share, forward cash per share, sales growth, as you can see, it's in the last 12 months, it's at -1. And then you got outstanding sales, total sales, return on equity, and then you got your operating managed net to debt, and then you got interest coverage from the last 12 months. Now moving along to Seeking Alpha, you can see the dividend scores right here. Dividend safety of a B, growth rates of A, dividend yield, dividend consistency, dividend yield of 9.77, payout ratio of 77, and get your forward FWD of $3.92 per share. You got your ex-dividend date, which is the 20th of December, and then you got your recorded date, declared date, and then payout date of 1/10/24. Right here you can see the summary based on some of the analysis. You got mixtures of buys and hold. If you look at here in the dividend estimates, I like to look at it here as well, so you can see based on their estimates by 2026 they'll increase that to $4.30 consensus rate, and then you got your 10% yield. Now moving along to Simply Wall Street, based on their share price and fair value. Fair value they rated at 75. Currently at the time of this video is about 40, which is about 47% undervalued. So that's pretty good in my opinion. Now if we go over to bar chart, as you can see, based on their price target, you got your high of 50, and then you got your target of 46 and got your low of 36. Based on their analysis, they rated as a hold. It's been a hold for 3 months now. Breaking it down to the current, you got 11 analysis say 4 strong buy, 2 strong sell, and then you got 5 holds. Now if we go over to Stock Rover, doing the risk and return based on the S&P 500 industry, and then Altria, you can see the 3-year return of 17%, 5-year return of 21% versus the S&P. So in here, S&P has been in a better track record versus the MO. Now looking at alpha spread based on intrinsic value, you can see the base case would be 47% undervalued. Now if you got the best case right here, 62%, and then the worst case will be undervalued of 30%. And then you could see based on alpha spread, it's undervalued by 30%. You got your historical profits. They talked about possible trap. Fundamentals, you can see right here. Revenue, 10-year revenue has been increased by 0% over the last 10 years. Operating income, 48% over the last 10 years. You got free cash flow, operating cash flow. Looking at the balance, you can see the assets of 38 billion versus the liabilities of 42. And then you got your other ones, gross margin, ROA, ROE, fundamental scores, price targets based on Wall Street. As you can see from here, you get the highest of 76, the average of 47, and then the lowest of 37. Now moving down to the other parts, which is the inside trading, you can see the last 12 months they bought about 93Ks, and you can see from here, so it bought in the last 3 months by these companies. So what do I think of this? I think it still is a solid company in my opinion. I am a long-term holder of Altria. I think it boosts a strong cash flow and a track record of consistent increasing dividends. It is an attractive choice, in my opinion, for income-oriented investors looking for that stable return. So, as well, you also have to figure out some of the risks. One significant concern, Altria, is potentially regulatory changes, which could impact the tobacco and vaping industry. Additionally, evolution consumer behavior and health-related trends could pose challenges. So, great track record, attracted opportunity in my opinion in 2024. But definitely make sure that if you are going to invest on something, look for the risk and return, and understand if this is the company that in your portfolio, based on your analysis, it's right for you. For me, I think it's a solid company. However, it is not one of those companies that is heavy on my portfolio. So, but I definitely like it. I think it's a solid company if you're looking for that dividend paying companies. So, thank you so much for watching. Hope you like this video. If you do, give it a thumbs up. Don't forget to hit the notification bell and subscribe if you haven't done so. Right, guys? Thank you so much for watching. Hope you like this video. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Bye. Aloha.